Hey everybody, welcome back to the Chopping Block. Every 4 weeks, the four of us get together and give an industry insider's perspective on the crypto topics of the day. So quick intros. First, we got Tom, the DeFi maven and master of memes. Next up, there's Robert, crypto connoisseur and captain of Compound. Third, we've got Tarun, the Giga Brain and Grand Poobah at Gauntlet. And finally, myself, I'm Haseeb, head hype man at Dragonfly. All four of us are early stage investors in crypto, but I want to caveat that nothing we say here is investment advice or legal advice or even life advice. So, Robert, we were just commenting how incredibly young you look with your beard shaven off. I got the feeling that Bitcoin's back at $20 with how young you look. How does it feel to be unburdened by the beard?
You know, I shaved clean for the first time in 2 years. I think it's going to be the catalyst to bring us out of this temporary bear market. So time will tell, but ask me in like 3 weeks if it worked.
Is this part of like being a new father? You're trying to reinvent yourself?
Yeah, exactly. You know, you got to start from a clean foundation. So, reboot, start eating a little bit healthier, this week too. So, maybe you'll have a younger, fitter me.
Baby only sees baby face.
What's the?
It looks like you're about to intern at Compound. It's like for showing up. It's your first day. I just really love decentralized money markets.
Yeah, me too. It's like I can't wait to see if they exist.
Yeah.
Wow. Is anything weird in the new diet? Anything particularly crypto relevant? Is it like meat only?
No seed oils.
No seed oils. Nothing that comes wrapped in plastic. Nothing processed.
Yeah, I feel like since COVID, my diet has gotten a lot worse than what it used to be pre-COVID.
Uh-huh.
So
yeah, mine too. I gained like 30 pounds.
Yeah, I gotta work on that. Okay, well, we've got an interesting piece of news this week. So our namesake, Laura Shin. So first of all, we're all here to congratulate Laura Shin because one, she just released her book, The Cryptopians. It just came out this morning. Actually, it was just announced that my place, which I'm not at right now, just received the pre-order book. It just arrived this morning, but I don't actually have it with me. Otherwise, I'd be flashing it on screen. But in the book, it was announced that there was a huge reveal. And the reveal is that we now actually know, according to Laura Shin, allegedly, we know who was the infamous DAO hacker. Okay, so I think at this point, given how many people have entered crypto in the last couple of years, I'm going to guess that for a lot of folks, this is ancient history. So we need to crack open the history book. So the DAO hack was a hack that took place, I think this was 2016. Yes, 2016. So in 2016, one of the very first major projects and ICOs on Ethereum was this thing called the DAO. And the DAO was basically a essentially decentralized venture capital group. And the DAO was, at one point, it held something like 5% of all the Ether in existence. It was a huge project on Ethereum, back when Ethereum didn't have a whole lot else going on. And it got hacked. And as a result of trying to ameliorate the side effects of this hack, which would have had the DAO hacker controlling a huge amount of the Ether in existence, Ethereum very famously pulled the switch to hard fork into two versions of Ethereum. One, which today is called Ethereum Classic, which is a sort of parallel universe in which the hacker got away with it and owns all the Ether that he stole. And then the current version of Ethereum, which we know today is just Ethereum, which is actually a sort of forked and rewritten version of Ethereum that made a temporary exception in the otherwise automatic rules of the blockchain, that this hack got undone and the contract got fixed in such a way that it is no longer hacked. So for a long time, it was unknown who this hacker was. And we just discovered that it is it's a 36-year-old Austrian programmer who is the co-founder of 10x, which is some weird ICO project that I don't know very much about. Do any of you guys know anything about this person or know anything about 10x or have any connections to this story?
So my only connection to this story is that the DAO hack is actually what got me excited about Ethereum and actually got me to notice that Ethereum existed and was working. So the DAO hack is actually what brought me into the ecosystem originally. I was not like an ICO participant. I didn't think it would work, to be honest. But the DAO hack was like the moment in time that got me paying extreme attention and made me want to build things in the space. I did at some point invest $12 in the 10x ICO. So I do know the project that way. But I will, caveat and say that anything is allegedly, we actually don't have any conclusive evidence that this person is the DAO hacker. there's always the 1% chance that he's not, so we don't want to have this person skinned alive. But aside from that, I have never heard of this person, and if he is, it's almost something to be proud of at this point, years out. Because it's one of the most monumental events in the history of both crypto and blockchains and Ethereum, period, full stop. It's one of the most controversial things to ever occur. A huge amount of people think it was ethical and deserved and positive, and it started to prove out most of the really important questions about, is code is law or is code not law, led to the fork of Ethereum into Ethereum Classic and Ethereum. And I kind of think it's something to be proud of, to be at the, that cataclysmic event. But we'll see if at some point it's proven that he's actually the one who did it, or if he admits to it.
Speaking of proof and speaking of allegations, I actually found the details of this article to be super interesting. Basically, once the ETH was stolen, it was swapped via Shapeshift, which is basically a ring exchange for doing cross-chain swaps, and basically swapped into Bitcoin. And then it was dormant for a while, and then at a later date they swapped it into Grin, then they mixed it, and then they swapped it into Grin, which is another privacy coin. And basically along this path, it was revealed that Chainalysis, which is a blockchain analysis group, was able to unmix the transaction from Wasabi wallet, which is how he tried to gain some privacy for these Bitcoins, which normally would have otherwise been very obvious who the holder was. And so this is an unknown capability that Chainalysis has. I presume it was somewhat easier this time because the transaction was so large in size. So there's a very small anonymity set. You just can't really hide such a large Bitcoin transaction. And then basically this swap from Bitcoin to Grin was sent to this person's Grin node, which was his name.io, which so not very stealthy there, but pretty interesting details. I also remember using Shapeshift in the very early days when you couldn't do other types of swaps, and just the fact that Chainalysis can also unmix mixed Bitcoin in certain scenarios is also pretty interesting.
So I was slightly skeptical of the story of that. It's as simple as Chainalysis has some magic way to unmix Wasabi transactions. Like maybe it's true, but it seems more plausible that they just had not that big of an anonymity set and they just kind of chased down all the things in the anonymity set. And they're like, oh, this one is connected to this guy who also has these other things. Or, they're basically able to plausibly rule out some of the other outputs. And as such, they're going to go and say oh, we were able to figure out that it's exactly this one. I don't know if that's true, but that's my gut feeling here, is that this is not like a large scale, because this is the first time we've heard about this, right? And this is not a live attack. This is something that's purely intellectual curiosity. Who hacked the DAO at this point, given that obviously they didn't get any Ether. They have ETH Classic, and I mean, who's going to cash out the ETH Classic that the DAO hacker stole? So it does seem like, I don't know, Tarun, if you have a perspective here, but I feel like this may be overrepresented, what Chainalysis did here.
I will say one thing that I remember was that, there's this if you were in Ethereum at that time, there's this very early testnet that 90% I'm sure of people have not heard of, called the Morden testnet. It doesn't really exist anymore. And if you were paying attention on Twitter, in maybe 5 or 6 months ago, Laura and a few other people were like, hey, does anyone have an archived copy of the Morden testnet? And nothing rang a alarm bell in my head more that someone is trying to do some type of deep analysis, because the people who were actually asking for the copy were Hudson from the EF, or at that time I guess he just left from Flashbots, Laura, and one of the two Alexes who worked at the EF, I forget which one it was, either the one who went to Balancer and DNS or the other one, Van de Sande or the other. It was very particular people very close to Ethereum Foundation plus Laura, and the clustering was very odd to me. And so it did actually seem like there was some much more weird digging going on. The Morden testnet thing was the big thing. So I suspect that. So the Morden testnet was what, one of the modern ETH testnets, but it was deprecated in the hard fork. It was kind of basically killed by the DAO hack. So I suspect there might be some truth to this because it was really hard to find anyone who had like that testnet archived, and the fact they were able to go back to that, and they asked on Twitter, like that part I guess wasn't said in the article, but like I mean you can go find the tweets. Like if you search Morden testnet, I don't think they're deleted. So I'm a little more hope in that regards. With regards to the grin thing, I'm a little less. I'm sort of in your boat that maybe there's something else going on. Like it just like the volume didn't make sense. Although one hilarious thing to think about is that ETH Classic has had so many hard forks, soft forks, and itself. Forget about hard forks. I mean like actually just forks from like miners not mining it and like big trades getting front run. That it does make you wonder if it is really this person, whether like they were making like large transactions and like some of the exchange soft forks that we saw in ETC. I don't know if you guys remember, like ETC basically got 51% attacked at one point, right? I was wondering if some of those are actually related to this person trying to like do this Grin thing, because the timing was around the time Grin was like sort of coming online. So there's a couple things to corroborate these other aspects that I don't think were mentioned. But the Morden testnet plus this sort of like ETC forking being around weird transactions, like there's something there. I would say perhaps there's more to it, but like yeah, there's a lot in the story that does check out. So
it feels like behaviorally the story of, okay, we found all this evidence that it's you. We present you with all the evidence. You're like, no, it's not me, and then you delete all your social media records and kind of run away. I mean, to me, I'm like, okay, that's kind of all the proof that I would need to know that this person is probably the hacker. Because at a certain point, like, you're protesting a little bit too much and then running away a little too fast.
I give it 99%. They could be scapegoated. There's a lot of different factors which make it like not definitive in my mind. Just because you delete your social media presence doesn't mean.
Robert, how big are your 10x bags that you're trying to?
I own the whole project now. I
think 10x on 10x, clearly.
Yeah, clearly.
Maybe like a week.
Your 10x is now 1x, Robert. I'm sorry to tell you.
0x.
I don't think he was actually able to cash out that much though, which is the funny part. Like most of it is still sitting there in ETH Classic. So I think it was only like a few mil or something like that from the article.
So maybe this gets to a slightly related but kind of crazier thing to think about. Like it's been raining cats and dogs of like attackers being found in a short period of time. And it kind of feels like a lot of the reason that this has happened is like whoever did the attack, whether it was this person directly or like this person was just an accessory, they were unable to get out of more than a certain percentage. So like the Bitfinex hacker, right? The actual hacker, as far as we know, could only get out of $900 million out of that like 4.5 billion. Well, that's what's missing. So I'm in the best case scenario, the person who isn't caught got away with that. That's a pretty low take rate given how much they were able to get out of, right? So I think like the moral of the story is eventually whoever actually does this stuff realizes it's actually really hard to get out in like serious size. And then they start trying to like get accomplices and the accomplices get caught. That's my sort of rough theory as to like how we kind of have some of the bumbling mistakes we've seen.
Is this even illegal though? Was this even a hack? Like basically he stole the money and then they just changed it so that the money was not stolen. So it's not like a normal DeFi hack where the money is actually permanently gone. In this scenario, like everything was kind of reverted. So like really who lost here?
Well, it's reverted on one chain, right?
Every Ether holder, right? Every Ether holder lost. The blockchain fractured into two. Every user, every developer lost in some way.
I think there's kind of a stretch though. Like ETH Classic is nothing. It's not like, oh, I'm missing out on some huge chunk of value. ETH Classic is basically worthless. So it's like in reality, you don't actually lose out on
Tom,
anything.
I'm excited for your Twitter DMs shortly after this episode.
Yeah, who lost? I mean, this is also like the number one event that like Bitcoin maxis point to in terms of the like flexibility of Ethereum monetary policy. Okay,
for sure, it was a narrative loss. For sure,
that's true. I mean, it's a big loss of credibility, I feel like.
Yeah, like the community decided that the hack was so bad that they made a new version of the blockchain without the hack, right? And like, yeah, that was an unbelievably contentious decision at the time and probably still is, right? So who lost in some ways, it's it's Ethereum in general lost, and all of the users and developers. Now it's years later. You could say that like maybe it made everyone a lot stronger, and I think in other ways it did. But like everybody lost, right?
Sure. I guess the point is there isn't like a group of depositors that is short, tens of millions or hundreds of millions of dollars. It's sort of more of I agree, a branding and sort of narrative loss more than anything else. But it hasn't been repeated, right? People wanted to do this with the parity multisig as well, and it didn't happen.
We don't know that people wanted to do it in large mass. I would say that parity was much more contentious than the DAO. In the sense that like parity was like, we're going to exit Ethereum, and then they did, right? And like rug pulled the client. It was a very different, it was even more crazy that they...
It's also possible Ethereum would be worth more today if the DAO hack had never happened. So we can't measure the counterfactual loss of value, right? It could have been that it would have taken much longer for
Robert
alternative
would
ones to
maybe
emerge.
never have made Compound if the DAO hack didn't happen. That's what we learned
true.
on this episode.
That's true.
hey.
I probably,
hey.
I never would have like looked at smart contracts if it hadn't happened. So
I don't know.
You would have just gotten rich off 10x. Never had to build anything.
Yeah, there you go.
I wouldn't have. I wouldn't have, because I wouldn't have gone to the Ethereum ecosystem at all. Yeah, like I hated crypto before that. Like I way long ago like dabbled in Bitcoin and was like, Bitcoin, whatever. It's not going to take over the world. And then the DAO hack is what got me excited about crypto.
Why did it get you excited about crypto? Why? What was exciting about it?
The fact that you could build using a computer program, like you can start to program financial assets on a blockchain. Like the fact that like the DAO was even deployed was like such a monumental achievement, I think, for society at large, that like the DAO as a smart contract getting deployed with the ability to like gather funds and deploy those funds, and like it was incredible. Like it was so inspiring. Like it made me like immediately look at Ethereum as like something usable,
It's definitely one of the more sci-fi things that I read when I was learning about crypto. I was like, holy shit, that's so cool.
Yeah, it's like the dream of crypto itself. And like, some people like need certain like events in the world to like get it and like have it click. And like right now with like the truckers in Canada, like people are getting like why you want like censorship resistant money. Like even though people like got that like 10 years ago, like people are like learning the lesson. Like the DAO was like, to someone who's like a builder, it's like you can build extremely complex financial infrastructure on a blockchain. It was like, wow, light bulb moment,
I feel like the other thing about this story is that it's another vindication of this narrative increasingly arising that crypto is actually not good for laundering money. And it's like all these big hacks, they keep getting unwound, or they keep getting found, or they keep getting frozen. And I think we're just going to keep seeing more of it. So the ammunition on the side of, no, crypto is actually not great for stealing funds or laundering money seems to be getting stronger every time that we uncover one of these.
One thing I just wanted to point out about 10x, I didn't really know much about them, although clearly there was, just go look at their chart, 100% insider trading on this. And like, you can just like see the volume like 100x in the like last 2.5 weeks.
Oh, really?
Yeah, it's like this is a chart of like, hey, someone's going to make
can you
some
throw
news.
this up on the screen?
Yeah, throw it up on the screen.
Just go to the 10x 1 month chart. It's like
Does it go up or down?
It goes up and then down, but it's like you can see the downward thing is like this like perfectly linear line. Like it's like hilarious.
Maybe it's like the bet that the attention is going to go up and then the price is going to go down when people realize that he's a bad guy.
It's a beautiful chart. The 1 month, the 30-day.
Oh, 30 day.
Oh, wow.
30
there we
days,
go.
just like look at this linear thing coming down. It's like, and look at the volume. Look at the volume. It's like,
Wow.
It hasn't had that volume in forever.
Yeah, true. That was actually the other interesting piece of evidence. I think it's less damning. It's kind of more circumstantial, which is like, I forget the name of the DAO hacker, but he was basically suggesting to people that they should short Ethereum right before he drained the DAO, which is like, I don't know why you would do that. It seems pretty leaky, but
Programmers are very rarely good traders. A lesson I learned firsthand in trading.
Yep.
One other thing is the 10x co-founder guy definitely started a bunch of scammy. Yeah, he started a ton of scammy like DeFi forks in the last 1.5 years. So I don't know what you want to make of that, but like he was tweeting today, and like then I looked at what he made and I was like, wow, okay, you made a lot of these like pangolin wash trade, or sorry, pancake swap, like wash trading like things.
Robert, you've come a long way as an investor.
I still invest in shitcoins like 10x though.
All right. From humble beginnings to more shit.
No. They're now shit NFTs.
That's true. I still get suckered by all the new things and shiny things on the crypto menu.
No, that's fair. That's fair. What is crypto for if not losing money to dumb things? Speaking of crypto and dumb things, so I think we should start doing like a weekly segment on dumb DAOs. So there's a new DAO that is trying to buy the Denver Broncos, which is a sports team. It's an American football team, estimated sales price of $4 billion that I guess is going to go on auction. And buythebroncos.com is out there trying. It doesn't even have, so Dirge Unite, let's own the Broncos together. It doesn't look like they even have any place to actually put money yet. They are recruiting people who can maybe help them figure out how to set something up on Juicebox, I suppose. I don't know. Like right now, so far, I think historically the biggest DAO is the one we talked about last time, Assange DAO, which was about 50 million. So this thing is about 1% of what it would need to be in order to buy the Denver Broncos. I don't know. What do you guys think the likelihood that we see bigger and bigger DAOs start going after more sensational things like this?
Here's my prediction, and I can be proven completely wrong, and I hope to be proven completely wrong. I think what will happen is over time, instead of capital being formed to do something cool like this, because like they're never going to hit their goal, right? You're going to see like more permanent pools of capital available, like either from DAOs or like protocols or whatever that are able to like respond to these events. So like we're already at the point where there's like protocols and DAOs with like $1 billion, right? It sounds crazy, but like it's true. They do. They have like $1 billion. And like, yeah, the Denver Broncos are like completely out of reach, even for like the biggest protocols and the biggest DAOs, but like a minor league team is not, right? Or like, you know, like things that don't cost $4 billion are like that is available, right? So like, I don't think we're going to see these like quick, let's fundraise as much money as humanly possible to like do this thing. 'Cause like that's a really hard coordination problem. I think what we'll see is DAOs and protocol treasuries and like these players like emerge that like have hundreds of millions of dollars available to like seize opportunities that like eventually like, oh, we should call, you know, M&A DAO, you know?
You want to do like a SPAC for DAOs?
A DAO SPAC. Yeah, exactly. I was going to say like a DAC.
So which football player is Chamath? I don't watch football, so I don't know anything.
Which football player?
Which football player?
Because like,
he's
who's
a
the
cheerleader.
SPAC promoter? The cheerleader, the one who's like,
oh, I see. Okay. The promoter. Yeah.
Got to be some celebrity who's going to like make the SEC angry, but there's always going to be one, right? At least one.
Yeah, I feel like you probably need Daniel Sesta to go in and be the guy who tries to buy the sports team.
Sifu?
Or Sifu's the other option. Or the 10X guy. Apparently he's quite charismatic, I hear.
Yeah, I mean, I'm just saying there has to be some like cheerleader. Like maybe Tom Brady is the football SPAC, a DAO SPAC driver. Because like he's already done all these crypto commercials. He's just like primed. And you know, I just like think that will be the catalyst. Although one thing to remember is probably the longest running DAO-like structure in the US that's like largely capitalized is the Green Bay Packers, where like people in the town like own shares in the team and they get some dividend, they can vote on some things, right? Like they do actually have these kind of like cooperative ownership structures in sports. I just tend to think most of the people who want to do it right now are unequipped to actually do any of it, led in part by the fact that like all the news articles for this thing tended to quote PhD students who are advising the DAO instead of anyone working on the DAO, which I found hilarious.
Speaking of dumb DAOs, because maybe this should just be a recurring segment. This is my current favorite DAO or SPAC DAO. This is Fry's DAO. They're buying fast food restaurants, and that's pretty much it. I feel like generally like the DAO formations that we see are.
Do I get anything for donating?
Well, you get a token. You get Fry's token, and in theory, you get some repayment from the cash flow from the fast food restaurant. normally they're doing something very epic. They're buying a copy of the Constitution. They're donating to Julian Assange. They're buying the Denver Broncos. But this is just buying some fast food restaurants. So respect. Start small. Starts practical.
What voting rights does the token have? Like voting on which chain to be a franchise of, or like how does this what's the token purpose here other than just like people?
I think it's just like a governance token. We put a bunch of money in a pot and then we can vote on which, or maybe they want to open a franchise. They have a lot of options.
This isn't even a SPAC. This is just private equity. Like, I feel like crypto is just getting more mundane.
Yeah.
I mean, it's private equity, except people are trading like the mezzanine tranche of the fund or something, right? It's like,
yeah, that one's going to end badly.
Well, clearly the franchises are going to lock them out at some point, right? And just be like, fuck you. Like, it just seems like unlikely that won't happen.
I think that one's going to have a principal agent problem, and the people organizing the DAO are going to figure out a way to get all the money, and the people who are investing in the fries are not going to get any money.
Imagine if your dividends were paid in Fry NFTs, though.
Then you've given all your money to people who go out and buy real world businesses, make the real world money, and you get JPEGs. Like, that's probably better.
I think a lot of NFT projects aren't so different, especially these ones that are funding movies that haven't been made. Like, it's not so different. There will be some weird thing that goes on. The difference is the franchises, I think, or franchisors will just, put a foot down on this.
Here's a chopping block experiment. We should profile a bunch of bad DAOs, and then the audience should tell us which of these bad DAOs the four of us should take our real money and put into one of these bad DAOs. So that a year later we can come back and be like, oh man, we lost all of our money in Fry's DAO. But let me tell you about the experience along the way in a way that would make us really credible.
We could do a dating game for DAOs where we bring 3 bad DAOs and then one person who's like, I want to join a DAO, and we ask questions on their behalf, and then they have to pick, and then
That sounds like an amazing game show, actually.
Yeah. Would be kind of funny.
I'm imagining now DAO dating, and I feel like, we've talked some about protocol M&A. It'd be interesting to see if we end up doing DAO M&A, and so one of these kind of failed takeover bid DAOs is kind of like, okay, well, we didn't buy the Blockbuster or whatever, but like the NFL DAO or the Broncos DAO rolls up a bunch of the smaller ones, buys up Fry's DAO. It's like, look, you guys don't need fries. Let's just go buy the Broncos together.
All I will say is I've been spending a lot of time thinking about how you would do an M&A protocol.
I've noticed that. Tarun, give us the rundown of M&A protocols.
The TLDR is if you were watching the Fay-Rari merger and disclosure, Robert and I are Fay investors. The Fay-Rari merger was a very contentious thing, and most of the contention was price discovery, where someone said a price, someone said I want 1/10 the price, and then people were like, okay, we're gonna pull all of the conversation offline and come up with the price and come back. So it was a contentious thing. I think if you can make a protocol that separates price discovery for 2 DAOs in such a way that each DAO votes on putting a portion of their treasury to be to sort of be the backstop price, and then you have this kind of continuous auction where people who own both sides of the token can vote, basically lock their tokens, and then at some point in the future decided by governance, basically the trade gets executed at the final price. Now you have to make this resistant to whales. You have to have some rage quit things so that people, some of the Fay argument was that there wasn't good enough rage quit. So there's a lot of details to make it work as a protocol. But if you can make the price discovery some type of thing that you see where people can basically vote on the final price or stake for the final price, I think you can alleviate some of these problems and make it relatively generic for certain types of governance contracts.
And eventually Denver Bronco DAO will use this to acquire Fry DAO.
And we will have called it here. You will have called it here first, Robert.
Yeah.
Your point around price discovery, I think, is well received, but it's maybe think why people who are not auctioning things or selling things that might be interesting DAO targets have not tried to solicit DAOs actively. This is a pool of capital that is not super price discerning and is actively looking to deploy. You would think actually trying to get these people to bid on your thing is probably a good use of time and money versus just leaving it to the sort of standard, high net worths or PE firms or whatever.
I mean, the whales still will have more power in this thing, but I think at the end of the day, you want to incentivize the whales to just like show their cards before the thing happens, and like somehow that's more how you want to design this. Because like right now, you have this weird thing where like some of the whales want to just like only discuss things off chain, and then the price discovery is extremely slow.
Well, this is a kind of a more general topic, I feel like. I mean, you saw the same thing with sushi when there's this interplay between the deal making that tends to happen, in the context of a DAO. Oftentimes there's deal making that needs to happen behind closed doors for people to feel like the negotiation can kind of happen in a way that is suitable to both parties. But the nature of a DAO culturally kind of demands that all the negotiating happen out in the open, right? And it kind of reminds me a little bit of, democratic countries that kind of feel like, look, we should be beholden to our electors in the way that we make decisions diplomatically, but it's also necessary for diplomats or legislators to be able to go behind closed doors and kind of hash it out and then come out with a proposal that they present to the broader constituents. How do you guys think about this dynamic in the world of DAOs? Because it feels like this keeps happening, right? You have this feeling that, look, the founder or a group of people who are kind of responsible for BD at the protocol level, they want to have the flexibility to be able to go behind closed doors and negotiate bespoke deals and maybe present them to the DAO. And communities, by and large, really resent this. They don't like this phenomenon, but it seems pretty universal.
I think it's effectively always going to happen. There's no doubt that that's just the nature until we actually have private smart contracts that actually work and can facilitate a lot of discovery without publicly showing your, imagine you could sign a commit reveal to a blockchain that only some subset of parties you want to see can reveal, and then you can reveal your bid, and then people coordinate that. Until we are at that point, which we're not, from a program,
we could do
not
that
not from a technical standpoint, but from a programmatic standpoint. It's just the programming that right now is a pain in the ass. No one's going to do it. It's not it's just really not at stage that's ready to do. It's not theoretic. It's obviously theoretically and proof of concept practically possible. It's just not in hey, you're going to put this in Rainbow Wallet possible.
Right.
And obviously that, 5 years more of engineering, that might not be true. But right now that's still going to happen. I think that's why you want something where it's people vote on this auction, then they get a certain amount of time and then they have to reveal their preferences, right? Right now the problem is the preferences revelation process is extremely asymmetric, and one side will reveal one thing in a way that forces the other side to take longer to reveal instead of shorten how fast they reply, right? And if you can make it something where they have to kind of have a back and forth, that will actually, at least, in a lot of cases, I think, reduce the complexity of these deals.
Well, one interesting case of DAO governance, quote unquote, coming into play was in the last week, we saw a huge drama play out in Terra. So Terra, for those who are not familiar, it's a layer 1 blockchain. It's been around for a few years now. It used to be a stablecoin. It still issues a stablecoin called UST. And it's a little bit complex to explain all the moving parts, but basically one of the most popular protocols on Terra is a protocol called Anchor, a DeFi protocol, in which we are actually, Dragonfly is an investor. And Anchor, essentially what they do is they offer very high yields to people who stake some of their assets, including stablecoins, into Anchor. And Anchor, because it offers very high yields, so on the order of about 20% yields, those yields in this environment are not really sustainable. It's very difficult to get 20% yield doing anything right now, given the way that yields have come down in DeFi. So Anchor's reserves were draining over time. And if Anchor were to lose a lot of the supply that were locked in Anchor, it would have very negative effects for the overall Terra ecosystem, as well as for Anchor itself. And so there was a proposal in Anchor governance and in Terra governance broadly to inject a bunch of capital to backstop and kind of help strengthen the reserve to allow Anchor to be able to continue offering these high yields for a longer period of time. And so apparently what happened was LFG, which I think is the something guard, they injected $450 million into Anchor in order to protect the reserves. And we also saw very recently announced a $1 billion fundraise to create $1 billion of BTC that is going to be backstopping the Terra ecosystem further. So a huge amount of capital that is going in to protect the Anchor ecosystem in a way that obviously, I was reading through some of the forum comments in the governance forum for Anchor, and it was very interesting seeing this phenomenon of a lot of folks who obviously don't directly have access to that capital. It's kind of maybe even slightly unclear where the capital is coming from, but they're just like, yeah, we should shove a bunch of money back into Anchor to keep it all going. Curious what you guys think of this whole Terra Anchor saga and where you believe it might be going.
I mean, Terra is a little bit between a rock and a hard place. Like people, clearly there is a large percentage of the UST in Anchor that is exclusively there to get this yield. And if that yield goes down or disappears, that kind of unwinds, and obviously that greatly impacts the Luna price just by virtue of the fact how Terra is designed. I feel like this is the 450 mil seems like maybe a stopgap, right? Like you kind of need that money to maybe make sure that this thing doesn't bleed out immediately. But it feels like maybe the rest of the money could have been better spent designing new sources of demand for UST, which was, I think, part of the thesis of some of the products they've been developing so far. And this doesn't feel super sustainable to me. Like I feel like $1 billion could go a long way towards developing new dApps or partnerships or use cases that are going to generate new organic sources of demand for UST, so they don't have to keep sort of burning the cash, so to speak.
It's an interesting point.
I agree, Tom. I mean, if you squint, it's like an extremely simple ecosystem, which is Luna makes UST, and the demand, pretty much all of the demand for UST comes from you can earn 20% on it. There's a little bit of demand outside of that, right? But like you can earn 20% on it. And that 20% comes from Luna. And this works. Eventually it gets so big that there's sustainability issues. If it works forever and it's small, it's a perpetual motion machine and everyone high fives. I think long-term, something has to change fundamentally in the economics of the system. This can keep working for a while, right? Like just put this in a spreadsheet, if you're paying people 20%, let's say on their UST, which you created from Luna anyway, like this keeps working for a while, but eventually it becomes unsustainable. And I think one of the primary foundational pieces of the economics of the ecosystem will change. It's going to have to. It might be the yields go down. It might be you mint UST not with Luna. Maybe it's, something totally left field. Who knows? But like, I expect something's going to have to give.
Tom, you raised this point of like, look, you could take that $1 billion and do a lot more things with it. You could build more use cases, build more partnerships. And to a certain extent, I kind of disagree in the sense that we have run out of ways to use money to buy adoption. We're like so far down the utilization curve of money that just think of all the captive capital right now in crypto, especially among the layer ones. We're just thinking about the current generation of like, all the folks who like Polygon and Avalanche and Terra and Near Protocol, and all of them have raised crap loads of money. And it's very unclear how they can use it to do anything. And that's ignoring even the previous generation, right? Like think of how much money Filecoin has, how much money Tezos Foundation has, how much money these EOS for that matter has, or Tron has. All of these folks have huge balance sheets and they have absolutely nothing to spend it on. And so I think we're in the situation now where the uses for capital to produce adoption or to produce partnerships even has become incredibly inefficient. And what you see now mostly is that there are tons of bidding wars between all of these protocols and their balance sheets for partnerships, right? If you're Tom Brady or you're Melania Trump and you want to launch an NFT project, you just go to all these foundations. You say, hey, I'm going to launch an NFT project. Give me your best price. And it's like, okay, 5 million, 10 million, 15 million to launch a project on top of them. That's where these treasuries are mostly going. So I don't know that Terra had a whole lot of other ways.
Well, Melania clearly didn't talk to the Solana Foundation based on all of the logistical fuck ups, and also then everyone working like Anatoly and Solana Twitter being like, we're not associated with this whatsoever.
That's true. I bring it up in jest, but most projects do look like that.
I don't know. I think some of those products are just like fundamentally crap or like unneeded. And so it's like, yeah, $4 billion is not going to save EOS. Like it's just impossible. But I just feel like, stablecoins are like the killer app of crypto. I mean, there's like, 13 billion and like Tether sitting on Tron. Like what is that doing? Is it being used for gambling, being used for payments? I like stablecoins are fundamentally like the killer app of crypto so far. And so I'm not super convinced that they've tapped out, but point well taken. This is why I think the 450 makes sense, because it takes a while to sort of build these things out and deploy. You can't just like, put this money to work overnight and expect dividends in the form of new applications. But it's like, you need to do something. You can't just sort of like keep holding on and hope that people are going to stick around.
I mean, one thing I would add is that unlike some of the other stablecoins that are sort of similar in structure like Celo, the Terra design never had an explicit reserve. And this is basically bolting on what you've seen in some of the other stablecoins of like a basket of other crypto assets as a reserve. So it's not like it's unheard of. And the size is, given how large Luna is relative to Celo, I think actually they're still undercapitalized on a dollar per dollar redemption basis. Like if we compare it to other sort of undercollateralized coins. So it's not so crazy size-wise. I do agree that it's kind of like hard to buy. Like customer acquisition cost in crypto feels like 0, 10, or infinity, right? There's no in between CAC. It's like it's either nothing, people are using it for free because they're earning fees or something, or it's like a little bit and you can get them, or it's just like you're paying infinite to keep them. So I think it is a little hard because it's not as kind of discrete in a lot of other industries, I guess. Also, the Terra ecosystem is a little weird, right? There've been a bunch of new protocols, like Mars protocol has like a 3-month UST lockup. For the record, I don't really own any UST or use it. I've used it a few times, but like not seriously. And part of the problem I had with it was like the only application you could really, if you're not in Korea, with disclaimer, in Korea there's tons of stuff you can do with it. But like there wasn't really that much, right? There's like Anchor, Astroport, Mars. And I do feel like until they have more protocols that are just like the base core blocks, it's really hard to just like pay for new users, right? For like Polygon or Avalanche, everyone just redeployed Uniswap, Compound, Aave, right? Like, and that was enough to like, but like Terra doesn't quite have that. Like the only thing that's there is Anchor, right? So I don't think they could spend their way out of this in any scenario unless they make the backstop, make people have confidence in it.
Well, if Doe is listening, in the interest of replicating the successful DeFi protocols from Abathur Chain, I might suggest he make a ribbon clone, which seems to be the thing that is missing from the Terra ecosystem so far. So you got to have every Lego piece together.
And don't get me wrong, Doe is also an incredible hustler and finding random teams, building all this stuff. So I just think it's like there's a cart before the horse thing. And to Haseeb's point, I don't think throwing money at the horses is going to work. You might as well load up, get as many carts as possible.
I mean, ultimately, it's buying them time, and it's a real question of whether Terra can use that time profitably to change the calculus. Because what may end up happening is that 6, 8, 9 months later down the road, we're in the exact same spot, and it's time for another $1 billion of backstop. So hopefully that doesn't happen. Obviously, we're at Dragonfly we're long Anchor, so we hope that things work out. But it's clearly not in a very promising position right now, given the state of the yield situation. But speaking of yields, one of the big pieces of news this week was BlockFi. So BlockFi entered into a settlement with the SEC. It agreed to pay $100 million in penalties and to pursue registration of its crypto lending product. So for those who are not following the saga, BlockFi, it allows you to get yield on your crypto. It's a kind of centralized company that has become increasingly popular in the last few years. And the SEC, many different state securities regulators started going after BlockFi in their states, basically saying that BlockFi was offering securities, unregistered securities, and that's not cool. And so this culminated in the SEC finally extracting a massive penalty, or relatively massive penalty from BlockFi, $100 million. And BlockFi agreed to stop offering their yield products to any of their customers until they register. So this is interesting on a few dimensions. I mean, one is that, okay, 100 million is a big penalty, but it's also not a big penalty relative to the market cap of BlockFi, which is, they sort of built a business by doing this, and then were able to get really huge, and then essentially, take a few percent tax on their business to go and fix it after the fact. But of course, it also reverberates across the industry in that one, it creates a path for other regulated institutions to start offering the same thing in terms of crypto lending products. And it ultimately maybe produces even a little bit of a moat for BlockFi, given that they are going to be the first to be registered, presumably with the SEC, for the offering of this crypto lending product. So curious, Robert in particular, I'm wondering what your reaction was to this news.
Well, I think in some ways it's good because, if you're a business that accepts money from retail customers and does whatever you want with that money to generate a return and then passes that return to customers, that's clearly a security, right? And, I think that's been relatively obviously a security or a securities related business for a really long time. They weren't just gone after for offering a security, but also being an investment company as well as fraud. It should be clear that if you are a very traditional organization that is doing that, you will have to comply. It doesn't matter that it's a new digital asset. It doesn't matter that it's a new type of asset. If you're in the business of taking money, using your discretion and skill and excellent prowess to make a return and handing it to customers, that's old school Wall Street, right? And so I see this as no surprise. I imagine that there's a lot of folks in the regulatory space that are not surprised by this outcome either. At Compound, Labs, we offer a product called Compound Treasury, which operates on the assumption that, giving money to a business to generate an interest rate for you is a security. And so it's only offered to accredited investors, as an exemption from registration. But knowing that businesses will be able to just register this with the SEC is extremely positive. I think not just for businesses that look like BlockFi, but for other types of businesses that don't look like BlockFi. I assume next up are securities exchanges that are trading crypto, right? And eventually you'll see all of these businesses and things like them, not just lenders, but trading platforms, brokers, all of these, types of entities, being registered businesses. They're not trading equities or they're not supporting the equities financial markets, but they're doing crypto and the crypto financial markets. And I think long term, it's going to be really positive for the space. In the short term, obviously, it's chaotic, but giving them an opportunity, to become, regulated and registered businesses is extremely positive long term.
Makes sense. Spoken like a true elder statesman of lending. I agree. I think it seems like a good thing for the industry that we finally have some regulatory clarity, even if it only comes through enforcement. Some clarity is better than no clarity, even if it'd be nice to have that clarity ex ante before people end up running afoul of the lines.
I actually really liked Matt Levine's take on this, which was normally if you want regulatory clarity, you can hire a bunch of lawyers and spend a lot of time. And maybe after several years, you finally get approval or yes, no, or a path forward for whatever the product is you're trying to build. Or you can do what BlockFi did, which is just build it and then take a small haircut after the fact, but having already built a great business. And it does seem like in crypto, that is often the best path forward, given that there doesn't really seem to be a lot of responsiveness or quickness to actually get clarity on all the products people are building.
So was EOS the most successful regulatory clarity entity in history based on this?
It's got to be, yeah.
Unfortunately, we didn't really get a lot of clarity from EOS, right? Because if you look at the history of the SEC going after token issuances as securities, so EOS, slap on the wrist, didn't have to register. Kin, slap on the wrist, didn't have to register. Telegram, nope, you can't do Telegram. Telegram token was too security-like. You can't do the DeFi money market car lending thing.
That was just 100% fraud.
Oh, was that just fraud? Okay.
That one was all fraud all day, all night. Yeah, it was all fraud.
Oh, I see. Okay, never mind. Never mind on that one then. But and then XRP is still up in the air, unclear where XRP is going to land. And of course, Ethereum, whatever, statute of limitations, I suppose. DAO was a security according to the SEC. So it feels like we've kind of got a big range and there's not a lot of clarity even from what the SEC has gone after.
I mean, I think it's going to get more interesting if the SEC goes after NFT stuff, or someone goes start going after NFT stuff. I feel like these things are all things, the BlockFi settlement to me just read I read some tweets from lawyers from 2018 and then we zoomed forward and picked a number, it wasn't like people weren't already saying a lot of this stuff, right? It's just that
right.
The government decided to pick a random stopping time and a random number, and then we got an answer.
Yeah, no, I think that's fair. That's a fair critique. All right, so we're winding down on time, but one thing I want to make sure that we get to is there's been an amazing discovery in the world of DeFi. So we were talking earlier about stablecoins with Terra, and it turns out the renowned stablecoin known as Ohm, otherwise called Olympus DAO, it turns out that it was recently discovered by some leading scientists and researchers that Ohm bonds actually serve as a volatility reduction strategy. Tarun, do you want to cover this?
Yeah. So I've shilled Ohm as not being all like pure Ponzi in this show many times. I spent my theory for whenever you should try to figure out if a crypto project is just a pure Ponzi or whether there's some actual like sort of mathematical reason that it should work, is if you see it last a really long time and then there's a huge crash and somehow still is not dead. And you see that like a certain number of times, right? Because like something that's like a pure Ponzi fake algo stablecoin, you'll see the death spiral really fast, right? We've seen enough of these.
It dies once.
ESD maybe had a little like fake second bump, but
yeah.
Okay, it's the bare
It's not
memes,
the suicide roller coaster. It's like one instant, Yeah. And
Ohm had this interesting thing where it like somehow didn't die, even though like theoretically, right, like everyone was like, oh, a lot of algo stablecoins, they're just these like kind of overly simplistic controllers, like somehow you can't really get them to work without putting huge backstops, just to be speaking of, for instance, backstops. Like the Celo and Terra models effectively end up needing some backstop. And you hope your staking coin is a good enough backstop. But eventually you have to diversify and offer kind of different types of yield, different types of duration risk to people on the other side. And so Ohm, I think it certainly fairly has gotten a lot of criticism because they created the greatest meme in crypto of 2021. And, there's a lot of stuff that probably was Ponzi-like the staking mechanism was really just not really doing anything for the protocol. But this bond mechanism that they invented and now is the reason that it became like the third most forked contract on EVM chains. And that the third most involves a lot of heuristics, like throwing out safe math and throwing out libraries, but whatever. Like assume that like third most did with the heuristics I used for this. One of the reasons it's so stable is that this bond thing actually does work in some way. There's some sort of meaning to like why having bonds as a way for a DAO to rebalance its treasury like works really well. And like people have said this forever. Like Tom has probably said this since 2020 that like DAOs should be like issuing bonds. And like, there was all these versions of it, like UMA options and stuff like that. None of them caught on, but the Ohm bond is this cone of truth. And this paper kind of formalizes that and argues that, look, you can actually lower the volatility of the asset that way by adding more bonds. And as you add more bonds, you can make like the DAO's treasury management strategy stable. So it was more like, I'm not sure, I actually met the Ohm folks in Denver. I don't think they like invented this figure like real with that assumption that this is, it was just that they were like fly by the seat of their pants and they kept adding all these features and somehow the Frankenstein worked. And like, under the cover, you'll be like, okay, there's actually like life underneath. It's not just, the dead robot.
Well, that's the magic of Darwinian evolution, right? There's no single hand controlling all this, but what rises to the top is the adaptations that lead to survival.
It's just like, think about a year ago from right now. That was like peak algo stablecoin. That was when Mark Cuban got rugged on Titan. Do you remember that? Like
that was a year ago? That felt like
was like a year ago. Time has lost meaning in this industry. But my point is like there were so many things that died and Ohm did not. So like there's some cone of truth, and that was hopefully what we tried to illustrate.
So the last thing is that I think a few of us were in ETH Denver over the weekend, which was absolutely incredible event. Huge numbers of people there. I heard that there were 15,000 people at ETH Denver. And from what I heard, the last ETH Denver, which I think is 2020, there were 1,500 people. And there were thousands of people on the wait list.
The last ETH Denver, I remember you could get a free ticket for it because they like had extra capacity.
Yeah, it was pretty nuts.
Totally crazy.
just like people spilling out onto the street, and there are like, lines like 2 blocks long to get into the venue. All the hotels are booked out and everything. So it's great to see, obviously, people excited, and great to see a lot of energy around Ethereum and crypto. I will say, though, that like I was a judge for the hackathon, and I feel like the projects were not substantially better, or they're not like 10 times more projects. So I feel like a lot of people were in town just to party or, talk about their project or whatever. But who knows? Maybe it's just my bias.
So are you saying that it was the modern equivalent of what Bitcoin Miami was, but for Ethereum?
That sounds right to me.
Yeah, except with a weaker form of COVID spreading.
That is true.
There's some poll I just saw on Twitter that was like, did you get COVID at ETH Denver? And I think it was like 60% yes, 40% no.
Wait, 60% yes?
Yeah, it had like 150 responses. So
Holy crap. Okay. Well, the other thing was that, so when I was in line at ETH Denver, because you have to take a COVID test to actually get in, and clearly it wasn't very effective because obviously there was a lot of COVID spreading there. When I was in line at ETH Denver, everybody in my group who was in line with me, they had all joined crypto in the last year, and none of them were devs. So I think it does vindicate a little bit that this is the kind of Bitcoin Miami for Ethereum, in that there were, almost everybody there was into NFTs, and that was their relationship with Ethereum and what was happening in this community, which just kind of shows how big the tent has gotten. And crypto, I don't know. I feel like more and more I feel like an old man in the space, given that I'm like, wait, you guys don't know about DeFi? You guys don't know about?
Look, you're getting old. Robert's getting young.
I know. We're going opposite ways. We're passing each other in age. Terrible. Jeez.
In a year, I'm going to ask you to invest in my new idea.
Wait, time is a circle? Is that what you're saying? Time is a circle?
Yeah, time's a circle. I'm going to go back to the outset.
Yeah. Robert, I'm going to be like, look, we got to. He's so young. We have to invest in him.
Yeah,
that's going to be our memo.
You know how right now there's high schoolers who are doing DeFi? Eventually, there's going to be like middle schoolers.
There are already middle schoolers buying NFTs, man. That's the thing that's scary.
I mean, like half that conference was kids. I mean, this is a funnier observation. It's like, I've never been so many places that checked your ID. We're very, it was very clear that they were like, the Rari kids they weren't even at the bottom of the.
They were too old. They were too old for that.
Yeah,
they're kind of the median. They're the median now.
That's nuts. Anyway, all right, guys. Well, this was an interesting couple weeks. Hopefully, we'll be back soon with another episode of The Chopping Block.
Can I ask a favor?
Yeah.
Can we get Laura as our guest next week? And let's do the deep dive. We should have a deep dive with the.
I totally agree. Okay, next time, homework assignment. All of you out there and all of us on the show, we got to read the Cryptopians, and then next time we're going to have Laura on for a history lesson.
And pitch us which shitty DAO to put our savings into.
Oh yeah. The shitty DAO. I think that the shitty DAO thing has got to be a sticking point.
Yeah, we need to do that for real.
We got our marching orders.
All right.
Thanks, everybody.